Yo, 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 welcome back to the channel. This video is brought to you by I bit off far more than I can chew with themonthly.macro.com. I am still working on the monthly macro. And to be honest with you, I even had the thought today that maybe it shouldn't be monthly and I should just literally turn it into a book that I that I create like one time and then distribute online for the ongoing future. I'm literally not joking that this is going to be the most in-depth look at the market that I've ever seen anyone do, and I regret it a little bit. But now I'm kind of in it, so I feel like I have to finish. So make sure you join the mailing list at themonthlyMacro.com, and let's get into the market. Man, I am turning into a zombie. All right. So the first thing that I notice today when I am looking at the chart, the number one thing that I want you to notice is that this to me looks, and you're gonna have to Google this, but it looks like a tweezer top on the 4 hour to me on SPY. You were pretty much in this previous demand zone from this previous trading range. So you traded right up into here, going into market hours today, and you traded right back down into the bottom of this previous demand, which is now a supply zone, right? It's the last zone that you were trading in before you got traded down into this area of the chart, and having a tweezer top action occur here is a pretty bearish look. So I am expecting what's new. I am expecting a pullback here, but I'm not so bearish just yet because now, with this rally, you have established some support here. And then if you look at the 4 hour on ES1, you have a pretty similar look. It's not a tweezer top so much, but you have this kind of shooting star. I think that's a shooting star, but almost an inverted hammer that you have here. I feel like I might be confusing a shooting star, and because this shooting star might be this looking little one here. But anyway, it doesn't really matter that much. Regardless, this is a very supply-driven candle. Okay, you drove price up really hard, and then you got shot back down, and now you're trading back below this trend. Let's look at the origin of this trend here. So this trend is dated back to October, and then you have a tap here in January. And you can see that you got rejected back below it here. So this ES1 chart to me looks like retracement. But overall, I mean, this move, it's hard to deny that this move has a nice accumulative structure to it, in my opinion. So I don't think that this rally is necessarily over. Obviously, I've said over and over again that I am generally bearish on the market. And and obviously we've had this rally occur here, which we were expecting to stop out around here at this apex, but you obviously crossed over. Now that you crossed over, you're starting to see the resistance pour in here, some selling coming through. Let's look at Fibonacci here, see how it correlates with our move here. I have simplified my Fibonacci a little bit. Well, I simplified it for the newsletter, but you can see, yeah, I mean, if you have it off of this flat top right here on SPY, you traded right into this golden pocket, right up to 707 almost, before you got rejected down. A lot of people will start their Fibonacci even on the first candle to start the move here, and if you do that, you have a perfect 707 retracement on that move. So that is, I mean, this is pretty much the expectation that we've talked about for a long time, that once you break the 0.5, the next test is the 0.707. If you can claim the 0.707, your rally can continue. And obviously right now you're failing, but that doesn't mean that you can't just retrace back down, find some support along this trend, and then claim it as support later, right? So we're not necessarily counting out SPY here. We can look at, let's pull that similar Fibonacci. I think it was here, or it might have been down here. I almost like this fib a little bit better for the way that I've been using Fibonacci anyway on SPX related. But yeah, so you can see this one is more like a 618 retracement. Let's take a look. What was this? 3 a.m. on Thursday. Oh, yeah, that's why, because the candle is different. because the timing is different because the 24/5 thing on futures. I don't know. I'm gonna force the 707 just to see. Yeah, I mean it's not really there on ES as much as it is on SPY, but it is a pretty clear 707 there on SPY. I mean I am this is a very obvious bearish pullback look on SPY, and so with ES, futures, obviously you have this inverted hammer look like we talked about before. Everything's looking like a short-term pullback here. So we're going to be looking for a retracement of this move, at least in the short term. Oh, what is this? Oh, a replay. Hold on, okay, I don't want to do that. I don't want to do this. I don't want to do it. I do want to exit this mode. Thank you. All right, so short term here, you can see also that you have this confluence. Let's start targeting our pullback here, right? What? TradingView, that is the second time that TradingView has crashed on me today. I'm going to have to try and see if there's an update or something out there. I don't know what exactly that is. Hopefully, okay, everything seems to still be here. Sorry about that. Yeah, so you have this white trend that is from the all-time high to the CPI pump in December. And then you have the uptrend that we were looking at before. That's from October to January, pushing through here. And then obviously there is another uptrend that you can draw, a few more, but the main one that you can draw is here, right, to this new confirmed low that you've had here. So let's draw that here, and then we'll be able to develop our retracement targets. And the way that we're going to do that is first we're going to look at the local move, and we're going to pull our Fibonacci from that. So what that looks like is you pull here to here, and we say always that SPY likes to retrace to the 0.5 or the 0.707. That's pretty much the targets that it always looks for. You can see here that there is the opportunity for the 0.5 to be confluent with these trends as early as tomorrow morning. It looks like, yeah, that would be tomorrow morning early. So I'm not sure if there's a news event or anything like that that could cause this sort of swift move, but that is one confluence that we're looking at here. Alternatively, what you could see is more of a slow bleed redistributive sort of look play out here, and then you maybe trade down to your 707 and you trap bears here temporarily, and then you move up. On a more macro basis, if we're zooming out, again, I think that overall you're going to be looking at this inverted fib primarily on a longer term basis for where this retracement and your ultimate like high will eventually be. So yeah, maybe this occurs and then you trade up to this 707 up here by March or April. And then you kind of play around, and then you get rejected down and eventually confirm this all as a big supply zone, would be the more bearish read long term. Now, if at any point you essentially break through this red trend that we have drawn here, we can even draw, let's see if we can get another downtrend here. Oh, that actually looks pretty good there. So now that is kind of your macro downtrend, right? So maybe you get rejected here, or if you trade up and through here, maybe you get rejected here for downside. But if at any point you pretty much break through both of these trends, then you're probably in good shape for another rally up above 420 to 430. As we've discussed before, that's pretty much what you're looking for, is a break of those downtrends, and then that's how you're going to get a more bullish outcome. As it stands right now, we still are relatively bearish, in my opinion, but there's nothing to really say that you can't have this range play out similar to how this range back here played out, right? There's not a huge discrepancy here where you're seeing overwhelming bearish volume or anything like that. And obviously now you're in more of a consolidative point. I will say though that this rally is relatively weak thus far. Perhaps the pullback sort of look that you're going to get here is something like this, where you have a deeper retracement back down here. Yeah, I really do like this. I like this zone here, guys, because also what you have here, if you get around here with that 0.5, you're also going to kind of tip through here, this 401 kind of liquidity zone that you had here as well. So I really do like this 400 to 401 range over the course of the next, over the course of the week. And then from there, we'll pretty much see what's going to occur next. So hopefully that was informative. That's pretty much how I'm seeing the market on like the short term. You're still in an indecisive place, right? Like, I mean, obviously you had this distribution play out here. This look is really accumulative to me. You have a little bit of strength occurring in the market here. You don't really need a huge spike in volume until, like, to confirm for bulls, until you break through this like 418. Then you're going to want to see that volume spike up here, similar to how you did back here, right? When you created a new high off of the CPI pump in December. Boom, that's where all your volume came in when you came to test that, and that's how you got that new high off of it, right? But you can see that was actually a really weak high looking back at it now. So but yeah, basically the point is you need the volume to come in when you're breaking a new high. You don't necessarily need it at the bottom in order for there to be continuation. You would prefer a really big volume spike at the bottom, similar to what you had back here, because that means that demand is outweighing supply significantly, and that means that your rally can go a lot further. But at least in the short term, you can still see bullish continuation, is the point that I'm trying to make. Hopefully that makes sense. I need to do like educational videos that kind of like break down all of those concepts, because it kind of is like it's kind of like just like it happens in my head naturally, like I've spent so much time looking at screens and charts and stuff like that, and so I really understand these concepts like supply and demand, and like what volume means relative to candles, and I see patterns like kind of naturally now, and things like that, trends as well. I need to do like educational content that kind of breaks down all of those ideas, but right now I'm just I'm basically writing a book, so it's really terrible. I mean, I don't even like. I did boil some crawfish this weekend with some friends, but other than that, I don't really have any time to myself between the kids and everything like that. But hopefully, if you guys pick up this thing, because if nobody buys it, then I'm gonna be like, wow, what did I do this for? But I think regardless, it's a really good body of work, and it's gonna like. I think if like 5 people buy it, I think that those 5 people will tell like enough people, because they'll read it and go, holy shit, this is crazy. And then hopefully that will lead to like more people buying it. But I'm not really that worried about it. Anyway, that's the monthlymacro.com. If you're interested, join the mailing list there so you get notified whenever it comes out, if it ever comes out, if I ever finish it. But all right. Hopefully you enjoyed that video, and until next time, peace.